Hello, good evening, everyone. This is Alex here from MarketWise Asia. Right, today, the time is 11:30, 27th of August 2021, and it is a Friday evening. So if you guys can hear me loud and clear, please say a hi to me in the comments so that I know everything is good and everything is well. So I can see quite a number of comments already saying hi to us. Hello, Gary, Eileen, Gerald. Yet Ming. All right. So if you haven't been saying hi to us, do say a hi to us in the comments. All right. And if this is the first time, right, the first time you're attending MarketWise Asia Facebook Live, all right, please type 1 in the comments so that I know this is the first time you are here. So right now we have about 140 people in the room. I believe there'll be more people who will be streaming in. So please give them a little bit of time, right, to stream in. So let me take a look at the comments once again. Hello, Pauline, Han Ho, Jenna, Nelson, Bun Sing, David Gan, all right. Boloma, Wendy, Bokwi, Candy, Dom, Wei Lun, Danny, Felix, Melinda, Yu Yang, all right. So there are quite a number of you. Thank you so much for being here and being on time today. Okay, so you seem, Alex, you seem very happy. Of course, I'm very happy, because my best friend forever, Jay is here with me. And do you guys realize that I'm wearing something a bit very different today? Okay, I also want to laugh. Okay, can you see my shirt or not? This is how many of you actually know this character? How many of you actually know this character? How many of you actually know this character? If you know this character, please type the character in the comments. Okay, this is actually bought by my wife. Okay, so my wife has exactly the same character but different color. Okay, so I find it very amusing. So interesting now. So I just wear it. Okay, anyway, I know many of you are here also because of Jay. Without further ado, I'll bring Jay, my best friend forever, into the room right now. All right. So can you guys hear Jay? Can you hear Jay's laughter?
Hello guys, good evening everybody.
Yeah, you guys can hear Jay. Okay, fantastic. Good to see everyone. I also can see Jay right now. Okay, I know Jay just had a second vaccination shot, I think yesterday, right? So I think he's still
earlier this week.
Yeah, so are you still feeling okay or not?
Hyper lah, feeling hyper.
Hyper,
you feel very happy. I feel very hyper.
Hyper. It is good. It is good that he had his jab. Normally he will speak for about 3-4 hours one. So this time around, because he had his jab, by right he should be feeling a bit tired. So I think by right, by latest 1.5 hours, this Facebook Live will end. Okay, so keep it short and simple and direct to the point. Okay.
Yes.
All right.
Yes.
So Joe said you made a lot of profit, is it? Not me lah. Of course, it's the stock god lah. Stock god is Jay. Okay, as I mentioned, I learned a lot of things from Jay. So he's a god to me lah. Okay, 财神爷啊，财神爷，知道吗？ Okay. All right. Nelson say happy and joyful as ever. Okay, so Gayla Yao, this is the first time you are here with us. It was the first time I've seen your name. Okay, so if you are the first time you're here, okay, thank you so much for being here. Okay, so tonight is I'm not sure whether how many of you actually read the news today. Let me show you, right? So the latest news just when the market opened, right, it is Powell see taper by the end of the year, but says there's much ground to cover before rate hike. So once this news is out, actually, the market just rally, just chiong. So right now, just have give you a very quick update on what is happening in the market right now, where the Dow is up 0.62, the Nasdaq is up about 1.1%, and the S&P is up about 0.73%. Okay, so as usual, first, before we start this session, all right, whatever we share today, it is just for informational and educational purpose. It is no recommendation to tell you what to buy or what to sell. So it is definitely not financial advice. So please do your own due diligence. And as usual, Alex is always wrong. Jay is always right. If you want to listen, do listen to Jay. Don't listen to me. Okay, so I'm just an entertainer over here. Okay, so a disclaimer is here. So for those who don't know, right, the US stocks fell off the all-time high yesterday before the Jackson Hole speech, right? So right now, of course, the market has already rallied. So can the market continue to rally, or is it really the time to take profit off the table now? Okay, so and what are the stocks that Jay is zooming in right now? So join us tonight, and we are here to start off the session. And one last thing, before I really start off the session, okay, we have this Asia Trading Festival. All right, previously it was called Market Insights Virtual Summit, and because this time around we have a new sponsor, we decided to give it a new name and also a refreshing branding look. So this is the Asia Trading Festival that's happening in the 9 and 10 of October 2021. That is just about 1 month plus more. So let me give you the link in the comments. Okay, Asia Trading Festival. You can sign up over here. Do pre-register for this event. All right. Prof Chan Yan Chong is here. All right. And Lauren Templeton will be speaking as well. And of course, Jay will be speaking at the summit as well. So this will be a content-packed summit as well. By the way, right, how many of you actually know or hear of Prof Chan before? If you know him, right, or heard of him before, please type prof in the comments of PROF. I think, before this COVID, somewhere when at the start of 2011 onwards, when I first started investing, 2011, so about 10 years ago, yeah. So every time there's investment seminars, and such, all this physical event, I will always attend Prof Chan's session because he always gives very good insight to this macroeconomy, the whole economy as a whole. So everything I listen to him and say, okay, interesting, that kind of feeling like the Eureka moment. Oh wow, it's something very different from what I've heard from other gurus before. So this time around, he'll be really speaking to you. I'm very excited to hear from him again because it has been quite some time, since he has last spoken in a Singapore event. So do register for this event, and you'll also receive a bonus report, right? From me, all right, top growth company to watch out, okay? So when it is ready, I will send the report to you. And if you have forgotten whether you have registered or not, never mind, it's okay. Just go ahead and just re-register again, okay? So, all right, okay, so enough of me talking. So Jay, all right, back to you.
So fast,
Yeah, of course, must be fast, or else we talk for 3 hours, eh?
So, hello, good evening, everybody. Tonight I'm in a very joyous mood because Alex come on only. He said until I don't dare to come out already. I better keep quiet.
Okay, yeah. So right now we have about 270 people in the room. So do give us a like and share. Okay. So liking is free. Do give us a like. Liking is free. Nothing, doesn't cost you money. Also tell Facebook that you want to see more of us in the future, because if you do interact, you don't engage with us, Facebook will deem that you don't like us, and they will not show you our Facebook feed on your feed already. So just give us a like and share. Okay, all right,
Awesome. Okay, once again, good evening, people. I can see a lot of familiar names. Hello, hi, hello, everybody. My hair
higher and higher, Linda Tan.
Okay lah, today not so high lah. Usually 8.5 cm. Today maybe only 7.8.
You're referring to your hair,
right? Yes.
Okay, I see.
What are you referring to?
Okay, we're just teasing. Okay, we are just teasing. Okay, with Jay, I'm always very fun to be with. Okay.
Yeah, every time bully me.
Okay, so yeah, I think let's kickstart the session, because I think the S&P right now, it is rallying, it's getting higher and higher right now. So what is your view on the market right now, Jay?
Okay, on the market itself, I'm looking at certain few key levels, which I want to share with all of you tonight. The key levels, the macro factors, as well as what is the level that I will consider that this all-time high is not going to be valid anymore. So practically it's from this perspective. And as usual, it's a value giving session. Nothing, no agenda over here. I think it's very good of all of you to join us on a Friday midnight, and I really, really appreciate that, because you could have been sleeping lah. So
or watching Netflix.
Yes, watching Netflix.
Yeah. But we have about 300 people right now, 285, with us right now. Instead of watching Netflix, right, you are watching this 8.5 cm guy and me, okay, on the screen right now. Okay, yeah, thank you so much. Right, again, once again, thank you so much for being here and being on time with us. Okay, yeah, we really appreciate that. Okay,
That sounds very wrong. The 8.5 cm.
8.5 cm guy. Yeah.
All right. Okay. So if you can put on my screen, I think I just jump straight
Let
into.
me add to the stream to you. Okay.
Great. So this is a chart on S&P 500 futures, and I think from most of you would have known by now. I would prefer to look at S&P 500 futures instead of the spot S&P 500. The reason being, number one, S&P 500 futures is 24 hours. Of course, except Saturday, Sunday lah. But it's 24 hours throughout different sessions, throughout the Asian session, the London session, and then moving on into the US session. So one of the reasons, the main reasons why I see this, because I want to see continuity. So I want to see how prices continue from the Asian session, which is obviously from Singapore, Hong Kong, 9 a.m., then all the way to our 3:30, where you go over to London. So after you go over to London, then after that, finally handing over the US. So practically, if you divide the 24 hours right into different time frames or different time zones like that, you will be able to see like, oh, here is what the Asians are taking, which is usually taking cue from the US yesterday. Then you move on to London, you're like, oh, okay, the London is starting afresh because of maybe they expect some news, some macroeconomic factors, etc. And then all I want to see in the US session, right, is there any continuity of the prices being bullish, or is it going to reverse? Because both situations or both scenarios have happened before. So this gives me an idea of what do I expect for the US session. And in turn, I will be able to determine what are the levels that I will want to look at during the day, during the course of the day. So, and if you're wondering, right, do I ever sleep? Yes, I do sleep quite late. I sleep about 3 a.m., 4 a.m. But I do wake up late as well. By the time I wake up, Asian breakfast timing is never possible with me.
Yeah, so don't join him for breakfast. He'll not make it on.
Yes, I will never make it. Because if I sleep at 4, you want to meet you at 9, I will say, let's meet at 7. Maybe I don't sleep. Yeah, so this is what I track throughout the day. Just in the event you are wondering, right? What are you all actually looking at? How come you look at futures? I'm going to look at 24 hours. Then what do you actually want to look out for? So looking at the market right now, I think I'm quite encouraged by the movement, but I'm also quite looking at one of the volume. The volume for this session is kind of a little low for it to be a continuation. But as always, right, the market has always been very, very sluggish and slow moving whenever it's breaking all-time high. So this is very normal, something that has happened ever since 2019, 2020, and then of course heading into here, 2021. So this year the market is kind of a little tougher huh? How many of you realize that this year market is a lot tougher? Can you type me in the chat so that just share it with us? Because we do find that this year is a much tougher market as compared to last year. However, okay, let's say 2020 versus 2021, right? How many of you are, once again, how many of you find that 2021 is much tougher? Can you just help us comment me in the comment section? Because I want to know, is it just us, right? Or is it all of us? Almost everybody, right? Right, it's much tougher, right? And last year was easy, right? Why easy? You close two eye like that, you anyhow hamtam, you buy, then you wake up, I make money. Last year is like that. This
just
year
buy. No need skill one last year. Just buy.
Exactly. You kind of just do this and then you just whack you just hamtam, okay, tikam, I throw. I open. Hey, surprising, I make 30%. Hey, I make 200%. Hey, this one fly to the moon. So that was the team for last year. This year is you open, you close eye, right? Then you open. What the heck? So it's a very, very 180 degrees change. And I want to shed some light with you in this aspect, so that maybe you get enlightened and stop buying the wrong places that you should be buying. Okay, so talking about this, next year will be worse. It depends. It depends what the Federal Reserve is going to do. Okay, so very quickly, I give you a top-down approach. I give you a macro breakdown, right? What are people watching out for right now? Alex, what do you think? In terms of the overall market, right? It is all based on, policy. So what is one measurement, right, that the whole market is looking at right now?
I think the market is looking at what the Fed is going to do, the Federal Reserve right now. Of course, Powell always, I might like, which means that, he want to say, doesn't want to say that kind, he didn't even give a very clear date on, when this, the rate hike will increase now. So people are actually guessing. So as what I see right now was even though the Powell said that they will reduce what did he say just now? He said that he ready to withdraw some of the easy money policies before the end of the year, and will also be cutting amount of bonds in the market right now. By cutting the amount of bonds in the market, right, the bond price should actually decrease a bit lah. But instead, today also rallied the bonds, the treasury bonds or the treasury notes. So I think there are, for me, my personal opinion, either there are two reasons. Okay, one reason is the market doesn't believe what Powell is saying. Second reason is that it could be because the market generally think that because by reducing the amount of bonds that they are buying, they see that it's a positive sign that the economy is doing better. So it can reduce the bonds, right? That's why the market think of it as a positive kind of sentiment or reaction. So the market just the treasury bonds market just rallied now. So this is how I view. So in short, okay, basically the market right now is very based on the sentiment and what the Fed is doing right now. This is just my personal view. Okay.
Exactly. So looking at the measurements of the US economics, right? Some one comment by May caught my attention. That's why so many gurus last year. Yes. And are they still around? I think so.
They are still around, the gurus.
I hope so. If not, 1 year really, 1 year is really quite a failure, if you just here for 1 year.
Because we organize events, so I also take note of who are the speakers and who are not speaking. Essentially, most of them are still around. The market is still pretty good.
most lah.
Yeah.
So and if you realize, right, I think the crypto gurus are coming back with vengeance. So I'm starting to see a lot more ads on my Facebook, CoinHash, then some other guy, then the CoinHash guy is damn funny one. I broke my Ferrari F430 so that I can share this with you. I'm like, dude, what has it got to do with your Ferrari? You never service, is it? That's why I break down. What has it got to do with whether you make money from the crypto, is it? What the heck? I was like, whatever lah. So these are the people that come and go lah, and there will be some that will be forever be here, like Alex, and myself. I think I've been here for 5-6 years, ever since 2015, 2016. Yeah, pretty much there. Okay, so long story short, it's very sentiment based. It's very the market reaction is very hinged on what the Federal Reserve is going to do, because the Fed Federal Reserve single-handedly printed its way out of COVID-19. So what did they do? Or what did we do last year? Last year, we added $3.3 trillion. I think this is, it's an astronomical sum of money. So they literally just injected this amount of money into the system. And therefore, right, you can see that this inflation rate that we are looking at over here, it just increases. And the what we are feeling is on the street today, ever since 2021. I think some of you would have already realized whatever that you buy in this year, right, would have cost significantly more than last year. If you're comparing to year end, November, December, this year you buy, whatever you buy, okay? You buy petrol, you buy car, you buy house, you buy watch, you buy food, you buy whatever thing, the price also go up. And this thing is called inflation. So what causes or drives up this inflation? There is a lag time, and this lag time stems from this 3.3 trillion that was printed in the market. So especially here in Singapore, where Alex and I are, we are feeling the real world effect by all this money, because Singapore government didn't print as much, but Singapore, based as a very safe haven, right? So we have a lot of overseas flow money into our economy as well. So I think some of you feel this, right? How many of you feel this, like inflation, everything getting more expensive? Yeah. Can you share with us in the comments? I think not just me, I think everyone feels it. You go and pump petrol, right? Unleaded 98 is like $3 per liter. That's like, $3 per liter, not ringgit, Sing dollar. Oh my God. So last time I remember was ringgit. Now it's Sing dollar. So can you imagine a Malaysian that's stuck here in Singapore? I pump 1 liter, 10 ringgit, mampus, die already, habis. Yes, and GST is going up to, I think, 9% in a few years' time. So Oh, well, so this is a real world effect of inflation. And why they're bringing this up? Because the Federal Reserve promise, right, is 2023. They are going to keep the rate 0% all the way to 2023. And at the rate that this inflation is rising, right, I don't know whether can they keep this promise, because as long as they keep to the deadline, the market, I believe, is always a fair pricing mechanism, meaning with whatever information that they have, they already price it in. But if this inflation just run away, right, just fly like 10%, 20%, it has happened before, all right? It has happened before, but it run to 10, 20%. What the Federal Reserve will have to do to reel in this it will be through the interest rate. So now it's no longer tapering. Tapering is actually not a bad thing, you know. You know what's tapering? Tapering is that your car is still going forward, just that you are no longer your foot is off the accelerator. You are going slower, but you are still going. Right? That means they are printing money. They're still printing money. Just that I want to print slower. I want to print lesser. That's tapering. The fact is you are still printing. But when you raise interest rate, that's where a lot of businesses, a lot of highly leveraged individual, they will suffer, because that's where in these last 2 years, so many, some of my business friends, temporary bridging loan, what business loan, SME loan, everything they tell me, interest rate very low, 1%, 2%, some they defer first year payment, whatever lah. So you know what they do? They take all this money, they go and buy property, they go and buy this, buy that. That's why you see everything all go up. So it's a cycle. It's a cycle. So this is the policy and how it affects us in the real life. So in Singapore, pretty much the same. And this is what I'm looking out for from a long-term horizon. I'm not so much of a long-term guy, but I do need to know these, because if I don't even know these, then suddenly the market dang, why? So this creates the awareness. And I feel that regardless of whether you are an investor or a trader, you need to at least know of it, like what is it going to do. So as far as if the Fed keeps their promise to 2023, I think we will be fine. And in the next 2 years, we should see a very nice continuation of the market heading upwards. Why? Because it's the after effect of this money printing. They are still printing money. So and that's why the US dollar is getting just getting trashed every single year after year. So this is the after effect, as long as they don't raise the interest rate before. If they raise it before, then you will expect a knee-jerk reaction. And exactly like what Richard said, right? Durian more expensive. Yeah, everything also more expensive. You can find something cheap, man. Labor getting cheaper, that's all. So this is US and why we talk about US, because evidently I'm very active in the US, more active than in Singapore. Singapore, I find that despite being a Singaporean, right, Singapore stocks a little behaving like those bonds. I think US bonds more exciting than some of the Singapore stocks. So that's why I mean, that's just me. Nothing wrong. If you're trading in Singapore, continue to do so. I think you will do fine, okay? As long as you're familiar with what you're doing, you will be fine. So this is the inflation rate, and we look at maximum, right? 5% is not very high. 5% is just here. If you compare to back then when this happened, this was the gold standard. So this is just at 5%. Can it fly to like 10%? Can it fly to 15%? At the rate that they are printing money, too much money chasing too little asset, then yes, of course, inflation will be there. And inflation, right? What kind of thing will be good? Okay, well, number one, inflation is actually good for stock market. If you think about it, if everything gets more expensive, the company's revenue will go up. Everything is, all going up. The economy will be doing better. The numbers will be better than before. Then, of course, they will account for the real growth, less of inflation. Then this is actually good for the stock market. But too fast, anything that is too fast, right, too drastic, that's where it becomes not so good. So is there a chance of it going like 10%? I think so. I hope not. But it's definitely possible looking at where it is, one straight line up. So the government will have to, or the Federal Reserve will have to do something. So do what? Now they are trying to taper. Taper meaning I print lesser. Then eventually they will have to raise interest rate. If let's say the things just keep going up, especially during COVID, what happened is one, logistical issues. Logistic is a challenge whereby you don't have the raw material, the supply chain is disrupted, everything kena. So it's like a triple whammy. So everything gone up. And usually I think all of us understand this. Once prices go up, I don't think it will ever come down. So, and that's a sad fact of life. right? So guys, so far, does it make sense? Does it make sense or not? If it makes sense to you, right, can you just help me type great? Can you just help me type this? Okay, just help me type great in the comment section. And I know some of you are watching from mobile phone, so are very comfortable. Oh, I'm gonna fall asleep. That's why I engage you a little bit lah. Then you interact with me a little bit, can? So just let me type great. Smash the like button. Don't smash your
Smash
screen.
the like button. And right now we have about 340 people in the room already. So if you are new to us, right, do give us a like and share. Liking is free, and also tell Facebook that you want to engage with us, because if you do engage with us, Facebook algorithm, all right, will not show you our Facebook live on your Facebook feed. So do give us at least a like. Liking is free, doesn't cost you money. Okay, just give us a like and to show your kind of a simple support for Jay and us. Okay.
All right, awesome. So this is inflation, and if you look at the rates, and if you look at all-time rates, it has gone high before. So this 0% is gone were the days whereby our savings interest rate were like around 5%. I think back then during when I was a primary school kid, the interest rate was still good. You save your money in the bank, you get about 4%, 5%, or maybe sometimes even 6-7%. But right now, this is the era whereby it's 0%. So if this goes up, because they no longer have leverage over here. Right now it's at 0 already. The only leverage that they have is they go into negative. Then that will be a little crazy. That will be like, I think like Japan. That's what BOJ is doing. Practically you store money, then you lose money. So it doesn't make sense. So that is the interest rate right here, and it can only go up. The only thing that I think everyone is concerned with and what they are, looking at it's the rate of increase, okay, or exactly what we call it, the speed of increase. So can everybody just help me type speed? Okay, speed. Let me type it in the comment section. And it's how fast do they increase? Is it going to increase like 0.5 or 0.25 every quarter, or is it going to raise like over some time? Because this speed, right, will determine how the market reacts. So anything that is more drastic, that is very different from what they expect it to be, that's why we get an overall, that kind of very swift, sharp, whoa, knee-jerk reaction, minus 2% day, that kind of thing. Okay, so this is on the macro horizon. This is what I'm looking at. I think it's something that will affect all of us, regardless of where you are. As long as you're in a developed nation, you will face this. Inflation is real. Things you want to buy, inflated. Interest rate also determines whether you are able to secure loan and at what kind of cost are you able to secure the loan. So I think, even if you're not trading, you're a long-term investor, you should at least know of this thing and what are the implications to you in your real life. So especially you're buying property, you're buying car, buying whatever besides stocks, right? Because there's so many things, so many ways to make money, right? So this is one thing I think you should know. And this is something that will really affect the stock market. So now, looking back at the stock market, right? Is it expensive or is it cheap? Now, what is this?
Gee, I think you need to increase the size a bit too small already.
Wait, I'm looking at the number like a bit wrong. How come is it 275?
To be sure, I think wrong. The number is wrong.
Yeah. Russell is wrong.
Yeah.
Okay, so looking at this, right? We are comparing always between the three. So let me just zoom to the proper area.
I go and get some water. I forget to take water.
Okay.
You kaki lai,
Okay, guys, that's it. That's the end. Okay, thank you. Bye. No lah, hyper. Okay, so now on Wall Street Journal, the WSJ WSJ.com market data, then PEU. You just go and Google PEU Wall Street Journal, it will come out. So Dow Jones, right? We can see is the cheapest one among the rest. It is really the cheapest one. Why? Because the implied price earnings ratio is only 23. So if you take 100, right, divided by 100 divided by 23, what's the yield on Dow Jones? So at midnight, my brain is not working, but I'm just going to round it off to 25 easier. So implied it's about 4+%. Okay, implied it's about 4+% on the Dow Jones. Then if we look at Nasdaq itself, right, this is slightly less than 3%. So this is around 2.8, 2.9, my best estimate. Okay, again, I'm not counting, I'm just estimating. 2.9%. Then S&P 500, it's around 3.2%, thereabouts. So looking at where which each index is yielding, right, then you will realize that Dow Jones, they are the 30 largest. So you have the industrial companies, you have the banking companies, You have one of my favorite company, or a few of my favorite companies are in there as well. So this is the 30 largest. So they are currently lagging. So what's currently leading? What's currently overheating? I would say Nasdaq. Nasdaq is like 2.9%, but it's still good because if you look at bonds, right, or any 10-year bond, 30-year bond, it's quite far, like still like 2 point something percent. So but then again, that's 30 years lah. But if this number keep going up, and it went as high as above 40 before, because I was tracking this quite regularly. This is very okay. This is very healthy. So anybody, why did I mention this? Is because if you're thinking of shorting the market, my advice is don't. Okay, my advice is don't short the market right now. Not because that I am a stubborn bull, right? I can be flexible. I can long, I can short. So can you. But don't go and short this market right now, because looking at all the facts, right? Despite what we think, despite whether we think that market is going to collapse or no reason for it to be so high, despite what we think, it doesn't matter. It only matters when we have $1 billion to back up what we think. And maybe in today's market, $1 billion is nothing. So if you've got 100 billion, you have 1 trillion, yes, what you think matters. And that's why Federal Reserve is like the godfather of this market, right? Whatever they say, whatever they think, the market react accordingly. But on here, right, looking at this, the market is moderately priced. We are not looking something that is obscene. And Dow Jones, it continues to lack the overall rest of the technological counters and S&P 500. So let me ask you this: if you want to look for your next best opportunity, let's say in the next 6 months, I know some of you are long-term investors, some of you are short-term traders, right? So let's say in the next 6 months, I'm looking at a medium term. Make a guess between the Dow Jones Industrial, the big companies, the Nasdaq Technology, or the S&P 500. Between these three, right, which one gives you the best opportunity or the best risk to reward? What do you think? Can you just share with me in the comments? Just type it in the comments. Whether is it DJI, whether is it Nasdaq NDX, or whether is it SPX S&P 500. In the next 6 months, which gives you the most potential?
Then they will say Tesla.
Exactly. Darius, obscene PE ratio is above 40. What's the obscene level? Well, think about this. If how do we calculate the implied return? Well, if you look at PE ratio, right, 3 point something percent, is it still giving higher than the market? Is it still giving higher than what other vehicles that you can get? I think it is still looking quite healthy, because if I would go to bonds in a short period of time, I'm looking at 1% plus minus, or now 0 point something percent. But when I look at the market, it's giving 4%. So is it still attractive? From a price point, right, it is still relatively attractive, Just like, for example, maybe some of you know, I'm an avid, I like to buy watches. Okay, I really love to buy watches. To collect them. So I've been following some companies as well, like local companies, right? Cortina, Hourglass. Can you believe that Hourglass PE ratio, it's like low 10, it's like 11, 12, somewhere there. So practically you're spending $11, $12, just earn $1, That's very, very low. In today's inflated context, right? Especially in the US, you want to find anything that's lower than 20, right? Good for you, because even the market is getting 30 already. You are spending $30 just to earn $1 on the market. So in the next 6 months, right, most of you are right. Dow Jones presents a very undervalued opportunity right there. So there are still some very good companies within the Dow Jones. Some of them are my favorite that I'm looking to, to get in before they run. So this is one of the main perspective that I've adopted this year. Last year is I want to whack whatever that is running. Whatever that is already running, because of the influx, it's like turbocharged, right? Suddenly, whatever you see is already running, right? You pick on that one, it will run even further. So, case in point, you look at how Tesla went from like what, $100 to $800, right? You look at Sea Limited, just went up by multi-folds until they become, I think, top 10 rank in Singapore or something like that. So that was last year. This year, right, you bet on those that are already running ahead. How many of you can you share with me, right? Okay, if you fall into this category, just have me type me in the comment section. How many of you for this year, you buy something that is running away, it makes you happy for 1-2 days, After that, in the next 3, 4, 5 days, it's come down and come down and then it triggers your stop loss. How many of you kena this before? Can you type me in the comment section? I'm pretty sure it shouldn't just be me. It shouldn't just be you. I think it's quite a fair number of people, right? So think about this. You kena that, right? Yes, thank you. Thank you, Christopher, Wendy, Roy, LOL. Not bad. Out of 300 people, only 4. So we had a
There's
special one.
asking, right, how do you calculate the yields from the PE ratio?
You take 100 law. You take 100 or you take 100, you divide by whatever this number you have lah. Then you indicate somewhere there lah. Because you are taking $34 to earn $1 ma. So what's your ROI? Your ROI is literally about. I'm estimating. I never count lah. At 12 a.m. my brain not working lah. not right down to the decimal place lah. So yes, a lot of false breakout, a lot of heartache this year, because this year you go and chase whatever that was running away. You make you happy. Wow, 2 days. Yes. Then, hey, hello. Wapiang. Alamak, die. And then you know what's the irritating thing? Hit your stop loss. It hit your stop loss. And then you fly back. And you will be cursing and swearing and you punch the monitor. Isn't that's what happened? I think it's quite a relatable story, right? Why? Because sad to say, if your encounter was this, right, is because you are out of sync with the market. Your cycle is 2-1. It's just that you are not choosing the right point to buy at lah. So this year that was the pretty much this whole change in methodology that I've adopted. Last year is really just whatever that was hot, chase it. You know, it will fly, it will get hotter. This year is you want to look for some value. I want to look for some stocks that are, not yet flying, because at the end of the day, all those hot stocks are already flying like mad. Eventually, money will have to flow somewhere else. Just like pressure. We study in school, right? In physics, we have 2 areas, one of higher pressure and one of lower pressure. And eventually, you mix them together, the pressure is going to ease up. The higher one is going to come down. The lower one is going to come up. So that's where you get into equilibrium. So in physics, that's how it works, in terms of pressure. But in money flow, right, same thing. This area, so hot with all the money. This area, now lagging, not so much money. Eventually, this thing hot until I cannot find returns anymore. Where do you think this money is going to go? It's come down lah. Come down to this undervalued, so-called undervalued areas. Then it's going to come back up. Then it's going to pull back again. Then it's going to come back up. If you expect these and then like this, right, and stay here, that's a very wrong expectation. It's just going to normalize for a while. The gap is going to close out. And then after it continue. And that's why for this year, if you have not realized by now, right, it's always Dow Jones and NASDAQ, right? I lag. Either I lead, you lag, or you lead, I lag. It's always an either on. Then you see Zun in the middle. You know what? Who is always in the middle? S&P 500. Always in the middle. So sometimes NASDAQ is at the top, then Dow Jones is lagging. Sometimes you flip around, NASDAQ, Dow Jones is now at the top, then NASDAQ lagging. So it's always like that. And I think it happened like 8 times this year. So by the 8th time or now the 9th time, right, you still have not learned. Then something is something can be improved lah, in my opinion. Yeah, and bang the wall and curse the stock exactly. So what I did was I slammed the table. So PE ratio or Shiller PE ratio, or I don't refer to Shiller PE ratio. Okay, the way that I trade, right, I'm a very technical person. Like literally 80% technical. I look at price level, and Alex, I think both of our approaches are pretty much the same. He looks at cloud, he looks at central pivot range. So he is more of a trend follower. Likewise, I'm also a trend follower. Just that I don't like to buy the breakout this year, because this year, right? Let me just give you an example. You buy the breakout, usually is nothing good will come out. Yeah, okay. Let me use these. Let me use this as an example. So let me just zoom in, right? So let us do this exercise together, okay? Let us do this exercise together. This is 2021. So I just want to make use of this example. In 2021, right, you have a breakout. So let me ask you, guys, just help me comment, right, in the comments below. Right over at this point, this is what we know as a breakout. In a breakout section, what will y'all do? What will y'all do? Can y'all just suggest what will y'all do? How many of you will buy? Can you just help me type buy? How many of you will say do nothing? How many of you say I don't know, I just eat popcorn, watch show? What will you do? Makes sense, right? Whatever that there's a continuation, it breaks all-time high. So what you do? Buy lah. Don't need think ma, just buy lah. So when you buy here, right, And then after that, you can see the prices just come down a little bit. Okay, come down. Then after that, you see continue breakout again. So what will you all do here? Can you just once again help me comment? Okay, guys, we got almost 340 people. It cannot make sense that only 4 people replying yet. So can the other 330 of you just help me do a very, very quick reply? What do you do here at this continuation of breakout point? Because this is very fresh from 2020, right? It's still in a whatever fly I chase kind of mentality. So we're gonna buy, and then we're gonna buy. And guess what? If we are gonna buy here at 3820, for example, can you all see where is the very freaking obvious area to put our stop loss? Can you all see that? I think it's so obvious that even a first day into the market, just read Investopedia, baby peeps kind of trader also can tell you, I'm going to put my stop loss here. Right? So this is usually what I do. I buy at the breakout. I take the low here, minus 1 cent, minus 5 cent, minus 1 ATR, whatever. This is all the common stuff, correct or not? So I can guarantee you, right? Your 70% of the stop loss will be in this area. Agree or not? If you agree, can you just help me type SL? Just help me type SL in the comment section. If you agree that 70% of stop loss will be somewhere there. This is pretty much what you are using for stop losses. Minus 1 cent, minus 2 cent, minus 5 cent, minus 20 cent, minus 1 ATR, minus 3 ATR. I mean, these are all the textbook stuff. So where do you get this? You go Investopedia, you get it. You go YouTube, you go to Baby Pips, you go wherever. Okay, that's where you get. And that's something that I don't use. Because I don't like to use something that people are using. It don't make sense. Most people lose money. So if I use something that most people are using, then obviously I will be losing money as well. So think about this. This is where, right, we have a very nice stop loss. Okay, we have a very, very nice stop loss area. I think we can all agree that stop loss will be somewhere here. And then our entry price will be somewhere here. Right? We more or less can agree. And this is what the market does this year. It goes up, it makes you happy, and then it scares you a little bit, and then it comfort you a little bit. Can lah. See, scare me only, never mind. Still come back one. See, still come back one. It's okay. Then suddenly, okay, can one. Still can break one. Come on, go. Maybe my feng shui, I turn like different angle. Maybe they face this angle better. I can make more money. That's what y'all do, right? On my laptop, I turn here, face here better. Got pretty girl. No, just kidding. So this is what you do. And then say, walao eh, see me side. You make so much noise, eh? Guess what? Majority of stop losses will be here, right? What just happened there? You kena the stop loss, right? Then you see the magic. I see the magic. Okay? See the magic. It's not going to be too far off the bottom. You kena already, right? My life kena side. I kena me. Walao eh, my stop loss. I then after that, the thing fly up.
Then it fly without you.
Yes. How many of you kena this thing like many times this year? Can you once again comment me in the comment section? Can you all just comment me in the comment section? Yeah, this is exactly what I think this year a lot of frustration comes. You come down, it kicks you out, and then after it, bye-bye. Bye, guys. I'm going without you. So it didn't just happen 1 time, 2 time, 3 time, and then if I were to go forward, right, it happened a lot of time. Really, really a lot of time. Every time you will have a breakout. And then after that, of course, April, we got a very nice rally. April is where the rally that, it just break through and never come back and retest anything at all. It never come and hunt your stock at all. So April just went. So when was the next time we have a nice rally like that? That was in July. Okay, that was in July. So as you go up, same thing lah. Okay, I show you how many times you have a resistance, you have a breakout, you have a stop loss, and then after that it makes you happy for a few days, and then after it scares the shit out of you, trigger your stop loss, and then it kick you out and say bye, and then it flies. What the isn't this what you have been dealing with for the whole of this year? And not just once, not just twice, guys, 8 times, 8 freaking times, okay, for the whole of this year. So did it just happen now? So I pull to the most recent one, I pull to the most recent one. Okay, so now participate with me, okay? Yeah, let's join the fun, because now I want to share with you what to do so that you will not be part of the statistics. So usually people will buy at the upper black line and then they will put stop loss in the lower black line. Do you all agree? What do you think, Alex? Do you think this is what most people would do? Would be
Confirm,
doing?
this one is textbook example.
Confirm, right? Especially, you know what pattern is this? This is a flag pattern. So in a flag pattern, right? Where to find this? You go YouTube, you go.
There's an impulse move, then consolidation, then there's a breakout, that kind of standard textbook example.
So self-advertisement a bit. You go swimtrading.com. I also got write about this pattern. I can go and check it out, okay?
You want to show them your link, or do you have a link to share with them?
That one not important, later lah. So what's important is this exercise here. What would you all do above the line? You will buy. Sure buy. Then what will you all do when it is below the line? Stop loss. And this is exactly what I think Alex likes to do as well. He is always looking at central pivot range, okay, the CPR. So I don't know where the CPR is, but it's somewhere around here. It's just plus minus where the pivot point is. So that's the pivot range. And he will always wait for, if let's say there's a retest back at CPR and then it bounces up. That's what he wants, right? Okay, so essentially we are looking at the same thing through a different viewpoint, through a different lens. Because now I want to come from a naked point of view. Okay, not a naked. Nobody want to see me. Maybe you see Wayne. Wayne is very tall.
I like it.
That sounds strong. So if I don't put any indicators on the chart, I believe some of you use a lot of indicator. For me, this is my chart. My chart is just like, I understand the chart. When I look at the chart, I know where to buy, where to sell. I want to tell you, I'm going to buy at 4350, 4360. This is where I will be doing my buying. This was exactly what I shared with my students in the mentorship program. Okay, 2 weeks ago. Okay, some of you, I think, I don't know whether you are watching. If you heard me saying this, just have me comment, yes, you said this. Okay, so I don't know if some of them are here, but this was exactly why I wanted to buy there. Why? Because most people, right, would have gotten stop out from here. So I want to buy where they are getting stop out. So what do? I'm doing a very evil thing. The thing that I'm going to do, right, is called stop hunting. And this is something that has worked tremendously, brilliantly, very nicely, very smoothly for almost the whole of this year. Of course, January, I also kena lah. I also like, let's go. Then make me happy 2-3 days, then come down and trigger my stop loss. Kick me already, then tell you bye, then it flies. Wow, angry. They are really angry. So this is a very, very normal market. By all means, it's a very bullish market because by this year, the market still goes up about 19%. So I think it's still very bullish. Anybody that says that this is a bearish market, I think you're delusional, okay? So this market is really, really just going. So now, you will buy up there. And then you will have your stop loss down here. I think 70% of you will agree this is what I'm going to do, right? So now I challenge you to do one thing. You do the reverse. Wherever you want to buy, don't go and buy. Wherever you originally wanted to put your stop loss, right? Camp there and wait to buy there. Then now you may be thinking, gee, what if it doesn't come down? Don't come down, then you readjust. But if it comes down, think about this. You have all to gain and nothing to lose. Why? Your risk to reward ratio is crazy. When you're buying near the bottom, what else can be worse? Your risk to reward is crazily good, You're risking $1 to earn at least, $1.50, $2, $2.50, $3. Isn't this what a trader is supposed to do? Well, or anybody using just common sense. Isn't that what you are supposed to do? Get in when you have asymmetrical risk. When you can make more than $1 by risking $1. That's what we should be getting in, So over here, right, you look what happened. This thing just run. Wow, so shook, Run. Then then they greedy. What they expect? Hit R1 already, you still don't want to take. This is something that I think Alex refers to this quite often as well. This is an integral part of my targeting or my TA framework as well. So over here, usually when it hits here, I will do some trade management. I will reduce the risk. I will probably partial profit, shift up stops, etc. But there will be some traders, a special group of traders who they will come up with these 3 letters called what? TTM. Alex, make a guess. What is this?
TTM.
Yes.
What's that, really?
To the moon.
Oh, to the moon.
Then he'll be, no, R1 not enough. Walao, where got enough? I want R2, I want R3, I want R2D2. You tang kuku ah. So when when it hits R1 and you all still don't take, right? This is usually what happened this year lah. Huh? It come down, it's okay. Temporary, retest only, retest the breakout point only. Can. You know where did I buy? Or rather the most recent time, where do I buy? I think Alex is in my mentorship group as well. I think I mentioned this level, right? Do you remember this? This fateful level that I sent out in my Telegram group. I told them, okay, I'm just gonna buy that. Why? See what happened. And this time I feel like a champion, okay? Because it really, I quite lucky lah. This whole year I quite lucky lah. I pray to the correct God lah, so I'm lucky, okay? So you see it come down, right? Kena, right? People cannot stop out already, right? Guess what? Make a guess, guys. What do you think will happen? Tada! Reverse! Yes! So what did people do? People heartbreak. Saddened, died. Heartbreak in 2,000 pieces. Lost money. What did I do? Steady. I got in right at the bottom. And how did I manage to come to this conclusion? Well, I may use no indicators. What was here, I think, is a good observation of the market. Hey, this thing happened 8 times, this is the 9th time already. This is the number 9th time. Like, if you still cannot get these, right, then I think you're not looking in the right direction. So now, hopefully, like, on the next 10th time, 11th time, are you all smarter already? So how many of you feel that, you are already smarter just by, knowing this? Can you just help me type smarter in the chat?
Just by listening to Jay, you all get very smart. He always right.
Seriously. So some of you say lower your stop loss level next time. Yeah, true. Lower your stop loss. So how much lah? You can put maybe 1 ATR away, 2 ATR away. Yeah, put it slightly further. Don't put it there lah. You put at all the obvious level. You asking to be hit what?
There's also a limit to how far you want to put yours. Suppose you put it too far away, then your risk to reward, it is not that good already. So
exactly.
Yeah. So too far, then the price will move up a lot more. Then you get a 1:1 that kind of reward. Yeah.
Exactly. So you say put stop further. Some of you can see, put where? Put here. Put here, far lah. Put so far, won't kena one. Okay. So let's count in terms of percentage. You are looking at I would say about 5% drop. So a 5% drop. So on average, right? Do you know the statistics of how fast does the market gain 5%? Usually, how long does it gain 5%? By the average measure of 1% a month, right? On average, it takes about 5 months for you to hit a 5% gain. On average. So some months faster, some months like April, right? Very crazy. It just bump up 3%, right? So on average, it takes about 4-5 months for you to hit 5%. So you want to put that far, right? Then you have to be in there and wait long lah before you get a 1:1. Then if you want 1:2, my suggestion is you might as well don't put stop loss, right or not? So that's not my point, okay? I'm not saying that don't put stop loss. What I'm saying is if you put so far, also don't make sense lah. Your risk to reward is really, really very, very sucky. So over here, where people, place as obvious stop loss, this year, one thing I observed, what works for me, you just go and buy it at where people get stopped out. They will feel very sad. You will feel very happy. And this is a zero-sum game lah. So when you make profit, there's bound to be people who are suffering from some losses lah. So all I want from 337 of you is hopefully after this, right, you will be on the correct side lah. So how many percent you will be wrong? What if you buy here and then the prices continue to go down? Well, you think about this. If it continue to go down, your risk is actually very little. Whatever amount that you put, okay? Whatever amount that you put, maybe you can say I just under the pivot or at the lowest central pivot range. I don't know, wherever. So you use that as a gauge. You can use the cloud as a gauge as well. Whatever Alex loves to do, right? But one thing is guaranteed. When you get in at this kind of very precise identified areas, right? Your risk is always much smaller than your potential gain. Because you think about this. Looking at where this is, right? Even you down 1 ATR, okay, you get in somewhere about 4,350, somewhere there. You down by another ATR, which is about close to 78%. Okay, so sorry, 0.7, 0.8%. So this is your risk. Where is your gain? Think about this. Think about this. Your stop loss is here. Even back to the original high. I don't say what. I say original high. Okay, just original high. Can you all see what is the risk reward ratio? 4.27. Not good enough. What are you expecting? Like 10 is to 1. Then please share with me if you find one. I very hard for me to find 10 is to 1. Maybe in crypto can. But here cannot already. Right? So I think once all of you understand this, your trading will be a lot more in sync. I think this is a fundamental idea that I believe every one of you watching here tonight would already have some idea of. And what I'm asking or what I'm hoping to enhance, right? It's whatever textbook things that you know, reverse engineer it, where people are taking their stop loss. You try to buy there, then won't die, right or not? So where people are buying the breakout, don't be so impatient to jump in together with them. You wait and wait for reaction first. That is my honest, advice. And if you can apply this to the market successfully, you apply to any random stock successfully, you will start to see some more consistency. I think that's what all of you want, right? You don't want to like wow, one shot make a lot, then one shot lose a lot. So I think very big take, right or not? So don't stop loss become long-term investor exactly.
Joshua is asking what indicator are you using, Jay?
I just
This is
mentioned,
actually he did use indicator. He's using the pivot points indicator. Okay.
yeah, that's
So
pivot
yeah.
point.
So
That's
this
pivot point.
pivot point standard. So can Jay, can I just interrupt you for a while? So just to add in my opinion. So actually even Jay is bullish at this low over here, right? So in fact, actually I was, for those who have been following me last week, I mentioned that I was actually a bit bearish on the market. Okay. So I'm bearish on the market because of some breadth, the kind of thing. So I'm bearish, so I didn't really long the market. So I'm staying out. So by staying out, I do make the gain, of course, but at least I don't make the loss, you see. So if you break, then it break down, it doesn't matter to me now. So I'm not just trading the stocks, I'm also trading other things like commodities, forex as well. So yeah, so even though I'm staying out, I didn't lose money now. So that's what I'm trying to say also. And talking about the central pivot range, Gia, let me just share my screen for a while. So essentially, the central pivot range is derived from the pivot point. Okay, so as can you see, like Jay already mentioned a lot of times, the same thing happening again. Can you see that over here? This is the green dotted lines over here are the central pivot range. Okay, you can see over here, over here, over here. I should have trusted my central pivot range and go long, you see, but I didn't. Okay, I have an inherent bias that I'm a bit bearish on the market, so I didn't enter. So you can see once again, time has proven that when price hit the central pivot range, it is a good time to enter the market. No matter what the market tell you, the breath tell you, it is still like what Jay. It is still a bull market. So don't try to fight the trend. It is still a bull market. Okay. So yep, and just a quick one. So for those who are trying to understand how to put the pivot points, like what Jay mentioned, how to put the central pivot range, or how do I put my other indicators, how I do that, right? You can go to this YouTube tutorial over here. I'll post a link in the comments. Okay. So if you watch, and just watch it. All right. So yeah, back to you, Jay.
Yeah. All right. So looking at some of the question, Joshua, what indicator I'm using to draw the black line? This is a drawing tool. This is just horizontal line. Like
This
how
horizontal lines only. Yeah.
like how you will draw support resistance. So that's there. And basically, yes, James summarize it into a very nice short and sweet. We wait for pullback. Literally, this is you know what Alex is saying as well, right? With when he shows the CPR, right, central pivot range, how nicely that every time there's a 3-4% drop, it comes down nicely to the central pivot range and then it bounces up. It comes down to central pivot range and it bounces up. So what is the tough thing to do in this case? I mean, Alex has been live for I think almost once, twice a week for the whole of this year. So we have been saying this is nothing new, right? And this is not the first time you hear what I'm saying. I don't think is something new as well. So our approaches are actually quite similar. So every time I tell him, I told Alex, if you sell lah, if you lose money, I lose money. We'll lose money together. So looking at this, right? The whole aim, and let me just draw a very nice conclusion for you, right? It is about looking at pullback. Don't chase the price lah, because last year you want to chase the price. It works nicely. This year there will still be some counters whereby you can chase the price and it doesn't pull back. But these counters were a lot more last year, not so much this year already. This year is much harder to find. Out of that 6,800 plus stocks you want to find, last year I could find like a dozen of them easily, or at least 2-3 dozen. The problem was last year not enough money, right? This year is, ayo, 6,800 I find. By the time I really qualify everything, wow, less than a handful, 5, 10 only. And that's pretty much, these are the super strong stocks that if you have a proper process, right, you are able to receive them out of 600 plus. So buying on pullback gives you a much better risk to reward, and it is very effective. Not always. Let me be very clear. Last year, if you did this, you would have waited whole year without doing nothing, just doing nothing the whole year. So I believe that we need to react. The market will always do what they want to do. What we do as a small ikan bilis, a small trader, right, is we need to follow and change together with the market. Because unless, right, even collectively, guys, let's just face this. All 335 of us, we just put out our net worth. I don't think we are even worth $1 billion. Let me just put it this way. So, or maybe Alex himself is already $1 billion. So that's different. So that, besides him, so we discount him, okay? We kick him out. So we are worth so little, And how are we able to affect the change of the market? We can't. And this is the reason why I always, and I reiterate what Alex mentioned, right? We trade with the trend. We follow the trend, because when there's an uptrend, there's money inflow. There is billions of money inflow. When there is a downtrend, there's money outflow. So just to give you an idea, and let me put it into context for you. I know a lot of you want to buy Baba, right? Wow, Baba cheap cheap wow, that's super cheap correct? So let me just put it in context. Let us look at market capitalization. Now it's 450 billion. At current price, it's 450 billion. So right at the top, okay, right at the top. Let me just do a very, very quick calculation, okay? Right at the top over here, how much is it? It's almost 100%. So right at the top there, it's 900 billion. So this company, Baba, at last year, September, October period, it was worth 900 billion. Market capitalization, right? This is market cap. So can I ask, right, realistically and logically, what is the money outflow? Can I ask what's the money outflow? So I think all of you will agree, right? It is minus 450 billion. Okay, billion, 9 zeros. So 450 billion. Then can I ask the next question? If you are buying Baba, how big are your positions? How big are your positions? Thousands? Tens of thousands? 500,000? 1 million? How does it fight the 450 billion drop? So that's my point. My point is our money is insignificant. And no disrespect, my money is insignificant, right? All our money is insignificant because why? We are the retail traders. We are the outsiders. The closer or the faster we can come to this realization, actualization, the more we will stop doing stupid things. So stupid things like, I think it's cheap, I buy. So one of the most painful stories, not story, like experience I have, right, was on this counter called Genting SP, 2011. Same thing lah. A loss is not a loss until I realize it. It seems very cheap now, so I should start buying more and more and more. So that was exactly, I think, how some of us operate. And I can totally empathize why. So 2011, Genting SP, if you know it, it went from $2.20 to $2, break a key support level at $2, dropped to $1.92. I thought cheap, I buy some more. Drop $1.88. Wow, cheap, I buy some more. Guess what? I buy. I buy a few times, right? Until, wow, betahan. I cut loss at $1.52. that one is freaking pain. So that one wipe out back then a big chunk of my whatever savings I had lah. And back then I was a student, okay.
And the moment you cut loss, did it reverse or not?
It didn't. Okay, over the years, and then Singapore stock over the years, hey, I cut loss because it went down further. That one damn heng. So that's Singapore stock. Then that's where I realized, right, in stocks, there's this concept lah. Once we thought, I think some of you, this is not the first time you hear me saying lah. We have the ground floor, right? The stock come down to the ground floor. And we think, hey, ground floor cannot get lower. Buy low, sell high, correct or not? Now you buy low, sell high. Why? Because come down got something called basement. Okay, so can everybody, if you empathize with this, right? Can you just help me type this word called basement? Just help me type this word basement and put it in the chat. And yeah, exactly. And like what Yu Yang is saying, only Xi Jinping got money to reverse this. Yes.
Sufyan Juma Hari, okay, I hope I get your name correctly. So it's support.com going meme today. Yes, I just did a Google check. This support.com is going ballistic today. So it is up 153% today. So yeah, so this is a short squeeze attack by the SPRT.
God. What is this?
All right, so I'm not sure of the whole story. Yeah, so this is a meme stock. Again, don't ask whether can buy this kind of stock. Me and Jay won't touch one.
Yeah. I don't touch one. I
don't know how to enter. I don't know how to exit. So right now, if you want to enter now, I always say it's like TMP. Tao Nao Pai. Okay.
Tao Nao Pai.
TMP. So of course, can it go higher? Yes, of course, can go higher to like right now. The price is what price? $50, about $50. Can it go to 100? Can it go to 100? Can. But what are the risks you are taking? Okay, I don't want to get that kind of excitement one time or like gambling feel. I think can go to 100%, 200% kind. So this kind of winning rate is very seldom you can get one. So I try not to get this kind of
yes
trade because it's just one time. I cannot get it right every single time. Yeah. So most of the time, I don't have the loud one. I enter, I will sure lose money. so I try not to enter this kind of meme trade. Okay, so this is my
everybody
my view.
Next time Alex, right, he share, I'm buying this, right? You know what to do, right? You know, every time he enter then drop, right? Then you know what to do, right? We hunt his stock.
Marcus, I'm not sure whether you are still around. Can I have the link? What link are you referring to? Okay, so let us know. And Juai is asking, I think when there's a gap up, do we normally buy the stocks? You want to answer that, Jay?
Okay, let me use this as an example. Okay, when there's a gap up like that, okay, maybe this is not such a good stock to. I use Nike. Okay, I use Nike. So no right, no wrong lah. Like especially if you're talking about stocks, right? Most of the time we will get some gap here and there. Why? Maybe usually it's because of earnings. Usually. So if it gaps without earnings, right? Then I'll be very interested to find out what it is. Usually it should be earnings. If not, it should be end of quarter. It should be some portfolio reshuffling and things like that. But if you have a gap like this, right? Do you just immediately go and chiong this gap? My suggestion is don't, because at least this is my approach lah. I'm not saying right or wrong. It's just something that I am trained to do, something that I'm very comfortable in doing. You have to do something you're comfortable, because if you insist on following without feeling comfortable, right, you will never have the conviction to hold through one. And that's where a lot of all the fear, uncertainty, doubt, FUD, that's where all the FUD happens. Then you will do stupid things like prematurely cutting loss. I don't know, just anyhow then revenge trade and things like that. That's not very constructive and consistent as well. So if you have gaps, like gap up, gap down for whatsoever reason, right? Do you go and chase it? My answer is no. Understand what this gap is for. Is it just a normal gap? Is it exhaustion gap, continuation gap, or because of it earnings? Especially if it's earnings, I would like to have the boundaries of the gap as well. By looking at how prices react accordingly to the opening range, to the gap, because that will tell me what people are looking or doing with the prices. So a lot of my trading, again, like I said, is all hinged on technical analysis. So once I have that idea, right, then I will know what to do. Correct or not? It's just like hey, that guy in front signal, should I let him cut or not? Well, it depends lah. It depends how you're feeling that day, whether you are feeling gracious, whether you are like, oh, he signal, I close out the gap. Well, also can one. So it really depends one. And that's the interesting thing about trading. No right, no wrong. It's just how you react. Sometimes you react correctly, you get the right outcome. Sometimes you react wrongly, then that's where the stop loss is for lah. That's why we always need to have a stop loss. Just like when we drive, right? We need to have a working and functional brakes. It's not about accelerating. It's also about knowing how to stop. It's also about having a seatbelt when we're in the car so that we get into accident, we don't fly out of the car and become Superman, right? Trading is the same thing. At any one point in time, right? Why Alex keeps saying Alex is always wrong is because, or rather for me, it's also half the time I also don't know what I'm doing. And I think this price, I see this reaction, I see this pattern, I see so many times already, I think it's going to be like that lah. So I will just do it. But when I just do it, I don't go in with a gambling mindset. I don't go in like all guns blazing. What I do is, I think it's like that lah. This is my assumption lah. So how much am I willing to back up my assumption? I think that's very important. When you are taking a trade, right, you have a certain belief, you have a certain assumption, a certain time frame. You need to ask yourself the next question is, how much am I willing to take out and, just back up this assumption? Because if you are not willing to back up this assumption, then don't take the trade because you'll be feeling uncomfortable. Despite what you may hear from me, you may hear from Alex or some other gurus, you will not feel comfortable. Like for example, if they tell you it's a long-term plan, I have a long-term plan for this thing. Like for example, what's my long-term plan? I have a long-term plan on Cardano, one of the coin, right? But if you're not comfortable with holding Cardano for long-term, and then you are expecting to trade for a short period of time, mine is really just for a few years, then we will feel very uncomfortable. When the prices drop from 297 all the way down to like 250, you'll be like, what happened? Oh my God, dropped 30% in one day. End of my life, I'm dying. Well, just like that, it's really just about half the time I don't know what the heck am I doing. The other half the time I'm just controlling with a stop loss. If it lose, I wouldn't die lah. Pretty much like that only. And that's why I think Alex keeps saying I'm always wrong lah, because I believe
correct.
along this constructive line also lah.
But sometimes when I place a trade, I have absolutely no idea whether the trade is going to work out or not, seriously. So I can only place, I think it's for example, at the support area, the essential period range, or at the R1, at the S1, whatever it is. But based on my reason, I enter already, I have no idea whether it's going to work out. I just put my stop, it's work out, it's good. It doesn't work out, I just stop out and I wait for the next trade. So it won't hurt me because I know that subsequently when I place more trade, I think the return's going to come back again. So that's why I keep saying don't follow me. But you need to have a system or process on how you really enter your trade, a trigger. Like you need a process to follow. Cannot just like, anyhow I see happy, I enter, then buy. Not happy, then I exit. That kind of,
Yeah, exactly. So basically to sum it all up very nicely, right? It's about this tick. What is called this tick? This tick is called just do it lah. Okay, just do it. And then after that, what's the next thing? You need to have a SL or at least a budget lah. That's pretty much as ironic as it seems, right? Because it seems like both of us have got a crystal ball and we know what the heck is going on, right? Honestly, sometimes I also ask him, what do you think of this? I'm very confused. I don't know what the heck is going on. So half the time we are all clueless one. So we are the same. We are always the same one. All right. We have one brain, 2 ears, 2 eyes, one nose, one mouth, right? Only that sometimes some of us, the mouth talk faster than our brain that can think. So we just have an idea, a theory, and then we back it up with a budget. That's all. And pretty much that's why you ask us, I don't know, I also think like that lah, but I'm willing to test this amount to go and try lor. So and it just so happened that I think both of us, maybe we pray to the correct God. So I think we have quite lucky that we get correct more than half the time lah. So pretty much it's like this only, trading is not rocket science. Trading is really, really just can be mastered one. It can be practiced and improved upon as long as you know where to look at lah. I mean, speaking from experience lah. Really, really, really. This is no joke one. Really, it's like that one. It's just don't know what doing. Never mind lah. Just do it with a budget. Okay, lose. Just like that only. Then pray you don't lose now 9 out of 10 times. Then that one you really a bit sway lah.
And I also think you should have the flexibility to really admit that you are wrong and switch your bias quickly. Like for example, last week, I was actually pretty bearish. Then the week this week comes, and the market really is really bullish. So I have to admit that I'm wrong really. So I'm looking for opportunities to re-enter the market again. So you have to really switch your views or bias in an instant, like when the market is suddenly it is bullish, then you should switch it already. Do you know of some gurus or whatever, like economists, they are perma bear one. No matter what time you tell them, the market is always bearish, because the Federal is printing too much money, the market is going to crash eventually, this thing cannot do, the thing cannot do, the market is just going to die, it's going to doom, that kind. So 2011, they be saying the market is going to crash. 10 years later, they still say the market is going to crash, but still haven't crashed. So instead of trying to stay, aside, might as well try to find a way to enter the market. You see, these 10 years is all along bull market. You get what I'm trying to say or not? If you understand what I'm trying to say, do type yes in the comments so that we know, right? Yep.
10 years, this 10 years really gone up quite crazy, because you
measure. So every year people are saying that it's crashing, but it is not. As in the price really tells that it's not crashing, okay. So you have to find a way to enter the market, be it you're doing short-term swing trade, position trade, or long-term investor. Okay, of course, it's something like long-term downtrend like Alibaba right now at this moment in time. Then do enter lah. Okay. For us, for me, I think for Jay also, we don't like to catch a falling knife. We only would enter when the trend reverse, and we have a way to tell us when the price actually reversed from a downtrend to an uptrend. And if you don't know how to do that, do remember to watch our Facebook Live more often. Okay. Now, of course, today there's no time to explain everything, right? Yep.
So if and I think you got a very good point. Today there's not much time to explain everything, but I think during the summit you will be able. So maybe Alex would like to share more about the summit.
Yes. So thank you so much. At this moment in time, 12:50 a.m. in the morning, we still have 300 plus people in the room. So if you are pretty new to MarketWise Asia and this Facebook Live, right, we have a event over here on the October 9 and 10. All right, we have this Asia Trading Festival that's coming up. We have Prof. Chan and Lauren Templeton as the keynote speakers. And of course, Jay will be speaking at the summit as well. Okay, so do register for this event. Pre-register now and you also receive a bonus report. All right, the top growth company to watch when it is ready. So very simple, just fill out your details, name, email address, and mobile, and you are good to go. And I will share with you the link in the comments. Okay, in the comments, just give me a moment. All right. Okay, and by the way, right, I think you guys should be able to see the scrolling screen, right? The Join MarketWise Asia Telegram channel. So we always give the latest updates, breaking news, and of course, our reminder to our Facebook Live in case you missed it. Okay, so we have about 3,500 to near to 3,006 people in the channel already. So do subscribe to this MarketWise Asia Telegram channel. I also posted the link in the comments. Okay, it is free. Everything is free. So we always give good contents and updates as well. All right, back to you, Jay. Any other things you want to share with the audience?
Well, I think all of you are here just waiting for faster lah. Tell me what's the next thing to do lah.
Okay, Adri is asking what are the DJI stocks that Jay is eyeing in the next 6 months?
Next 6 months, without betting an eyelid, McDonald, Disney. Disney holds a very important place in my heart. Why? Because Disney gave me my first pot of gold when I was first trading it. Right, it was only about $20. So right now it's like crazy high. I'm not saying that you buy now. Now is not the time to buy. Towards sometime nearer to the end of the year. That's where I think we have a very nice run to the following year. So usually, if you understand Disney, it is belong to this kind of cycle, this kind of pattern. Disney is one. McDonald is very robust, very stable as well. But I will also be very mindful of, let's say, if we look at S&P 500, right? Today it break the all-time high. Then if let's say I look at the futures, so what happened? 0.83. So it's quite robust. So this is very robust. It looks quite good. And this is daily chart. What it has proven to me, okay, is that this stop hunting is successful. Why my color so cute? Wrong pen. No wonder my color so cute. So this stop hunting is successful. So SL hunted, and after that we have got a very nice run, and then it broke the previous all-time high. So this was the ATH, and then now it was broke. And once it breaks, right, it it gave me a very, very good confirmation sign. So what is this confirmation sign? Well, the R1 is there as a checkpoint. It did break above, it did hover around, and then it continued to go up. And this to me, it's a very, very healthy sign. Why? Because so far, right, if logically, okay, and without being subjective, right, the high is getting higher. Okay, the highs are really, really getting higher. The lows are also getting higher. So if anybody can say that this is a downtrend market, I will really be okay lah. I give you thumbs up lah. I wish you all the best. That's all I can tell you lah. I don't want to argue with it because so many years in this business, right? There will always be people who disagree with you. There will always be people who argue with you, and it's easy for them to argue because we are the one that is in public and stating our what our views are lah. But in this case, I've learned one thing. I like to share facts, so you conclude from the facts yourself lah. I don't like to share my opinion because my opinion again will be wrong one. But you look at the facts are facts, so facts cannot be changed. Facts are facts for a reason. So it's a fact that the market is really just heading up and up and up, and it's quite healthy ma. This one not healthy man, very, very healthy ma. So market like this still not healthy then I don't know what's called a healthy market. Last year, that kind of market is called abnormal market, okay? The last 10 years I've been looking at this market, only last year was this crazy that it come down and then it did a V-shaped reversal. That was that crazy. But that was last year. It didn't happen until the $3.2 trillion just got flooded into the system. But over here, this is a very normal market ma. What are you expecting the market fly to the moon man? This is not crypto This is equity This equity has a huge impact in economy, on businesses, on earnings and everything ma. So there are some fundamentals. For coins is much which is very different. It's very sentiment driven. Of course, the savvy and the intelligent investors will be very fundamental base driven as well for coins. Believe it or not, I think that's how Chris is doing it. Chris Long. So he is a very fundamental guy. He really understands about the project, the coin and all that. And this is something that I have done for Cardano as well. That's why I'm not asking you to go and buy at this price lah. Okay, go and identify a good price that makes more sense from a risk reward point of view. FYI, I'm only saying this because my last got in price was 106. Look at where it is today. 106 is just barely a month ago only. So that was my buying price. That's why I can say it with ease lah. Okay. But if you are looking at today's price, then I also don't know to buy or not buy. Because if I look at today's price, I also a bit like that I buy. My risk reward don't make sense. So you have to evaluate all this. Okay, so I sound bullish on crypto. Well, it is bullish, what?
It is bullish. Definitely, it is bullish.
But what coin not moving one? Now, recent past 4 weeks, all coins moving one.
Bonnie, I think you should also attend our Facebook Live regularly. I mentioned about crypto bullish about 3 to 4 weeks ago when it started from a downtrend back to an uptrend already. So I mentioned every single week, and because every week there are people asking me. Then I don't know for sure whether it's going to turn bullish or not. But I mentioned based on my reason why price actually turn bullish, okay, above the cloud, above the CPR and such, okay. So I actually also have some position in the crypto space as well, just that I'm more into the altcoins rather than the Bitcoin and the Ethereum. Okay.
So I think let me look at some questions. I think James saying there's concerns between divergence between S&P 500 and Dow. Sorry, not Dow. What is that? Russell 2000. So let me do this and then start from, let's say, a same starting point from this year. Where is my starting point this year?
So Russell 2000. Let me see.
Yeah. So Russell 2000, it's evidently lagging. This is the black color line. So the black color line is Russell 2000. This is RUT. And it was leading. Okay, it was leading until it just in the most recent shuffle, right? That's where you can see the big boys took back the lead, and this crossover happened over here. Okay, so that was sometime in July. That was where the crossover happened. Then this is lagging. I think it's perfectly fine. This is a strong sign of leadership, because you think about this. If you want to buy up something, what will be your first choice? The big companies or the small companies? Obviously the big company. You won't be buying the small companies for obvious choice, right? So number one, you'll be looking at big companies, and this is exactly what they are doing. So so far I didn't go and see whether RUT lagging it's not a very heavy consideration factor for my side. Okay, but what I'm looking at is I'm always looking at a yo-yo between Dow Jones and then Nasdaq, Dow Jones, Dow Jones, Nasdaq. So it's always this switch. Then S&P 500 exactly in the middle. So that's what I realized. And because my trading time frame is much shorter, a few days kind of thing, so I'm doing mostly swing trades. So looking at this, right, it allows me to, okay, now it's time to switch on over to Dow. Then Dow, I switch back over to the tech stocks. Like for example, if you look at technology, which section of technology or what related to technology? Go and look at communications. So what are in communications? Facebook, Snapchat, Twitter, all this, even I think Netflix. Is it in communication? Yeah, I think so. So Netflix is in communication as well. These are the strong companies. And that's where right now I think it's improving. And it's heading over to the leading one. So what is leading? Technology is leading. Healthcare is leading, but it's like
Healthcare has been up for quite some
a
time
while
already.
already. Yes.
Yeah,
Really
wow,
a while
already.
already.
Yes.
Now it's getting out the window already.
Yeah.
So James, hopefully that answered the question. Darius, some people compare the market to Fed balance sheet to determine whether the market is overvalued. I don't know. Honestly, as stupid as it sounds, I really never track the Fed balance sheet. I only know it's growing. It's growing. I think even faster than how my Feds are growing. So, so I really never track. So I can't comment on that.
Okay.
Yeah.
Thanks Alex, UNG, not bad. We pay UNG. Yep. So yep. Anyway, it's not me. I mean, basically, I just share some trade ideas. You take the action and just trade it. So it's credit to you. Okay, it's not me. All right. Yeah.
Not bad. This is actually quite nice. Okay, so what am I looking at? Okay, what am I looking at? Right now, okay, so whatever I share here, right, it's for entertainment purpose. For me to do sharing of my research doesn't mean it's a buy or sell call from me. And I really don't want to do such thing because whenever I say certain things, right, then after the next few days, I will get a lot of private messages to my Facebook, and then AJ, what you think of this? AJ, that day you say this, how come now like that? Walao, what you expect me to do? Hey, hello. Hey, I want to buy your stock already. Your stock cannot come down, okay? Later, people come and complain. So it doesn't work this way. So what is strong? This is strong. No doubt. Undoubtedly, this is strong. So what are the component stock? ETF. So if we see ETF.com/XLC, these are component stock. Let's look at top 10. Top 10 will do it. So XLC, communication, this is improving. So this is where there's a solid, I would say, a breakout, a retest. The structure is, you cannot get nicer chart than this, right? High, low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You cannot get nicer than this, eh? This is really very nice, and how long has it been nice for? Very, very long, So you find me a nicer chart than this. I can find you some, but for now, yeah, this is as nice as it goes already. So this is strong, definitely strong. And some of the stocks I would think is offhand. Where is it? Yep, offhand. Here is it. Here we go. You have Facebook, Alphabet, which is Google, Comcast, Charter Communication. I am not so familiar with that. Disney is in here, my favorite stock. Netflix is in here, Verizon, T-Mobile, AT&T, Activision, Blizzard. So if you look at ATVI, this kind obviously cannot. This is obviously not the one that's leading. So what is leading the market? Well, look at, usually if you look at the top three, basically it's just Google and Facebook, because Google and Facebook is already 48%. So if you look at Facebook, I think, yeah, Facebook, and this is nice. Why is this not nice? There's a high here. And it tested here, retested the previous area, and then right now it's like on the verge of just going. And I do think there's a good chance of it, testing out and trying to break this as usual. So is this a right risk to reward if you go and chase it? Up to you, lor. You have to think Then where should you be buying in if you are not chasing in? That's where the patient gain comes in. Fortune favors those who are patient, not favors those who are impatient. So I think you all have heard Warren Buffett. There's a quote, right? The stock market is a mechanism to transfer money from the impatient to the patient. So what do I mean by patient? Be a price setter. Set the price you want. Buy it at the price you want. Don't be a price taker. Price taker meaning I chase it right now. I want it now. Everything give me now. You try to chase, you chase now, then it break high, then after that it come down. Voila, why like that? That's where I'll be getting in. Okay, no offense to you, but that's literally where I'll be getting in because I already have a predetermined price that I think, okay, based on the price now, let it do whatever it do first. It will have to come down to wherever I want it to be because no stocks goes up like, like this lah. Apart from the support.com, what's that, AMC and all those stocks. That's why I stay away from those stocks. I can't trade those stocks. You ask me what price to buy, honestly tell you don't know. And it's not purposely one. Okay, I like to trade this kind of stock. My favorite. So nice. How much nicer can it be? I like to trade this. Last year, so nice. How much nicer can it be for last year? Honestly, if you look at Disney, okay, right now it's just staying stagnant, sideways, which is just very, very normal until the year end. You should see some movement towards the year end. You see last year, fly. So how much did you fly by? Last year, 71% from November, like where the high is. And this is a very, very big company, not those penny stock, This is a $320 billion company. It's a mega cap. And it flies by 73%, 71%. Why don't go for this kind of stock? Why go for I don't know. Why do people I really don't understand. Why you want to do this? Why you want to buy here? Why you want to buy this?
Die just want to buy Tencent and Alibaba.
Yeah. Why you want to buy this? All the money is like all going down, all boy sui one. How come you want to go and buy? Like, if you want to ask a girl out for prom, right? A prom date, right? Who will choose I mean, everybody will want to find a pretty girl as a date, right? I mean, logical lah. And this to me is practically like, ayo, ani pai kwa mai lah, don't want lah. Sorry lah, no offense lah, but this is exactly what I think lah.
But again, to us, it's like make no sense to us. But again, different mindset because some of you are thinking in terms of the value investing, buy low, sell high. If you're holding for a few years, then I think it's okay. It's okay for you, to average down $2 cost averaging. But you need to understand, if you keep going to another 20-30% down, how many times can you keep buying? You do have billions or millions, Maybe you have lah, but I don't have lah. Yeah, so you have billions or keep averaging down. How many times can you keep buying? So you have to understand from our perspective is that we are a trend follower. We only want to buy when the trends reverse, okay? So it's really up to different perspective and different kind of investing or trading strategy. Okay. Yeah. Oh, by the way, Jay, actually XLRE
Real estate, strong,
real estate is strong. So actually this year, actually very few people mention about real estate, the sector. Actually this year is performing very, very well. XLRE, maybe Jay can show the XLRE. It's improving. Yeah.
Yes. So some of most of the listings in XLRE, it's REITs, if I'm not wrong.
Yeah, REITs.
Some of them are REITs. But apart from that, I think we also got like Simon Property Group. This is one of the companies is in there.
Property management, that kind,
pretty nice lah. Okay, not like the nicest, but not bad lah. The risk to reward still makes some sense. The structure is still clean, higher low, higher high, and looks like it's gonna. So what is this? Actually, I'm very bad with all these triangles or whatever because I also took the examination for the CFTE. I was like, wow, everything returned back already. I don't remember all these things on. I'm very bad with names on. So all I know is like, okay, here is a strong resistance. They are pressing, and then they are pressing, and they already pressed a few times already. So eventually, I think as they advance, eventually they should break lah. Okay, they should technically lah, based on textbook theory lah. But then again, if this resistance is so strong, right, then this also can be a solid stainless steel wall, and then after it will just come down. There's a strong possibility as well.
Xiang said, "True, TROW, yes, very nice chart. Maybe Jay can show very, very nice chart."
Yes.
TR.
Why I laugh is because something Xiang Lun is my student.
Oh yeah.
This is something we shared in the group. T. Rowe Price Group. T. Rowe Price. This is very strong. Super strong.
Yeah, strong.
So guys, I mean everybody is watching this, right? Versus okay. Like I just want to put on two charts. One is T. Rowe Price Group. The other one, let me just put on this. I think everybody's favorite, 10 cent. Because now 10 cent become 30 cent. No, not 30 cent. 10. So when you have stocks on the left versus stocks on the right, which one will be your choice? Can you all help me type your choice? Whether is it left or right? Just let us, roughly know what you think. Like, is it left looks nicer or right looks nicer? So
Actually,
yeah,
even though most people can say I want to choose the left hand side, but when
they
the
will put their
time
money in
comes,
the right side.
you still want to buy the right hand side one. Wow, price is really cheap. Tencent is really cheap, Tencent 8888很便宜 very cheap. Why should I want to buy? I don't understand why also. I mean, seriously.
Yeah, exactly.
Yeah.
So this is why I don't get it lah. I mean, on the left, evidently, it's a very nice market a very very nice counter to trade, right? Then on the right side, maybe it has something to do with how we are brought up as a human. I think from young, right? We want to buy things. We look for like those mega fairs. We look for those Singapore, what do you call it? Great Singapore Sale, GSS. We always want discount, discount, right? So we tend to take this buyers, right, and we head on over to the stock market and expecting a discount. I'm believing it's this way lah. So I do like discount. Yes, I love discount, especially when I'm buying things of value or I'm buying asset. But when it comes to stocks trading, right, buying things on discount, there must be a limit lah. Because like I said, when you think that it's at the ground floor, then you have B1, then you have B2, then you have B3. I don't know. Maybe you got B18. I also don't know. So it will just it's about how much money do you have to keep buying law, and you have to work out the budget lah. And if you have a long term plan lah, so you maybe 10 cent can become $1 that kind lah. Oh, you really believe wow, 10 cent can become $1. Then you hold law. Not me lah. Nothing wrong. No offense. It's just not my style lah. Because I'm just doing what suits me. You have to do what suits you because you are a steward of your money, not my money. That's why I never put my money on other people's opinion. I always putting my money on my own belief, my own opinion, because that's where I got conviction. That's where I got follow through. So this is what kind of stock that I think you really no brain on. You just do this, you throw, and then more often than not, it should go to the way that we want it to go lah. So to talk about SPG, don't get me wrong, okay, don't get me wrong, from the whole of this year and last year since the recovery, right? Yes, on a macro trend, you may say that it's a massive downtrend. I agree, but let's look at the last 1-2 years. What has changed? The low interest rate environment, coupled with whatever policies that they are having, right? XLRE has been a very very strong performer. So I think this is in the stock name on the left just now was called TROW, TROW. So I think Christopher is saying I talk about girls and now recommend SPG. I'm not recommending SPG. I'm just saying this is one of the companies that are bigger in XLRE. Okay, so you're looking at this. I think it's a very if you see what I'm seeing here lah, I really do think that it's gonna go. Whether it makes sense to you, whether you believe it or not, that's up to you lah. But when I'm looking at this, is one of the bigger company, the property management companies inside. I don't like to trade REIT because every time you trade REIT, then they give out dividend, right? Then you see the price kena a bit. Walao. So I personally I don't really like that lah. So I think I saw KLAC as well. KLAC a little noisier lah, not my preference lah. Okay, not my first choice. Will not be my first choice. Okay, so that's what I mean. And thank you for the clarification. Okay.
Yep.
Okay.
So for Jay, sometimes he say that he doesn't like to trade risks. Me too, but it doesn't mean that you cannot trade. If you don't know how to trade, just trade the whole sector, XLRE.
Yeah.
The whole ETF also can work, right?
So nice.
Right?
This is so nice. And what else? I think technology is leading. Technology, if you look at XLK, that's where you can see it broke a high and then it retested the previous, and it seems to be leading according to where Nasdaq is going as well. So how do you find certain stocks? Close eye lah. You go and see lah. Oracle, Microsoft, then Apple. This few lah. Then Salesforce and XLK. I think what we have is also Visa, Mastercard, PayPal. All these companies are in there. All these are technological companies that offhand I can think of lah. Then you just go and do your search, and whatever price that looks nice, It's much easier, right? Rather than go and find those like choppy, sideways, not so nice. Then you're making your life a lot tougher. Actually, trading very easy one. It's either you're right or you're wrong only. But in the midst of getting there, wow, we like to, oh wow, this is what the 18 palms of dragon slaying, whatever. Oh, yeah. Then we try to make it so cheap until so you look at my chart, my chart very clean, right? Just like my hair, my hair very neat, right? My chart also very neat. So that's my style. I don't like to draw so many things on the chart until I look also blur. Yeah, so hey Jeffrey. So I don't like to go with those that just beaten down and rotating out. All-time high is good. Identify a price in these kind of sectors because just like momentum when they go, right, they don't suddenly just do a U-turn back, right? Momentum when it's starting, when money flow is starting, it tends to go for a while, and then after that it will slowly turn out. So that's what rotation is doing. So industry rotation happens like countless times already. I counted like 10-20 times this year already. So every 1-2 weeks it rotates. So what should we do? React accordingly. Don't expect it to fly to the moon. We just hit our target. I tighten my stops, take partial profit, and that's it. So just keep doing these, right? Just keep doing back the right things. Rinse, repeat, rinse, repeat, rinse, repeat. Then your whole year should be quite okay, right or not? SPG is Simon Property Group, okay? Simon Property Group.
Sarong Particles lah, Jay. Alright, just teasing, okay? Sarong Property Group, okay? Although SPG can stand for Sarong Particles, okay? Anyway, yep. I think it is getting late already. Okay, one last question. Okay, Charlotte Ming Yuan is asking how to choose the pivot point indicator. Maybe just Jay, just give them a very quick walkthrough how to get the pivot point indicator.
So you go to indicators, you type in pivots. So you type in pivot, you'll see a lot. So we are using the standard one. So once you click on the standard one, right, then it will appear on the chart already. Then it's all here. Then how do you go and do all the number of pivots? You can plus, then it will appear all over the place. If not, you just cleaner a bit show one of it will do . Then the color is up to you entirely up to you. Just do this and then the pivots are there.
Okay, so Charlotte, do watch my YouTube tutorial. So I also teach you how to add the pivot points, the central pivot range, and the cloud indicator also. So doesn't mean you have to use everything, but whatever you think that's useful, you just use. What I think that's not useful, just don't listen, just discard. It is fine one. So just use whatever you think is makes sense to you and interesting to you and useful to you. Okay. So I think it is getting late already. It's been 1 hour 45 minutes. You see, Tio Bo. Every time talk to Jay, every time always overrun one.
Okay, don't say already.
Anyway, I think Jay really give a very good value to you. Talk about the macro view, drilling down to the individual stocks as well, to the different sectors as well, to the individual stocks. Okay, so if you find this session useful together with Jay, right, please type value in the comments so that we know that at least you enjoy the session with us. We still have about 250 people in the group. So if you enjoy this session with us, do type value in the group. So really appreciate your time with us tonight because we know that tomorrow is the weekend, and of course you can always opt to watch Netflix, but you decided to stay with us tonight. Okay, so once again, just a very quick reminder again, we have this Asia Trading Festival that's coming up in 9 and 10 October. Prof. Chan and Lauren Templeton is the keynote speakers, and of course Jay is speaking as well. So do pre-register now. You also get a free report, top growth company to watch out for, and I will send it to you when it is ready. Okay, I will post the link once again in the comments. Okay, so where is it? Okay, so it's over here, and of course do sign up, do register, do subscribe to our Telegram channel, MarketWise Asia. Okay, we have about 3,500 people in the channel. Okay, where I always post breaking news updates and also let you know when are we going to do our Facebook Live. Okay, so normally I do every Friday nowadays. So or of course, sometimes I will invite special guests like Jay into this Facebook Live as well. Okay, may the stock price continue to rise like Jay's hair. Okay, I hope so. I hope so. So right now he said that he's 8.5 cm, and I hope so it'll be 9 cm to 10 cm in just about another month's time.
Anybody want to buy me a wig so I
Yeah,
can go higher?
yeah. Okay, so yeah, so we hope enjoy our session, and may we what in the stock market together. Any last word for the audience, Jay?
I think you pretty much sum it up everything already, and I don't want to sum up anymore because it's gonna take another 1 hour.
Okay, okay. So I think it's really getting late already. So again, thank you for staying with us throughout this 1 hour and 50 minutes. Okay, so tomorrow is the weekend, and I hope you guys have a very good weekend ahead. Have fun, stay safe, and I will see you guys again next week. All right, thank you guys. Thank you guys. See you. Bye bye.
Take care, guys. Bye bye.
Bye bye.